The path to becoming a broker isn't as overwhelming as people might think, but many people make the mistake of asking the wrong question or focusing on the wrong thing. They might ask, how long does it take to do my Cert 4? Or when do I need to do my diploma? But getting qualified is just the entry ticket. Getting appointed is just paperwork. Getting access to a CRM and a lender panel is just infrastructure. Becoming commercially viable, trusted, referred to, and actually successful as a broker is a completely different thing. The better question is, how do I become a broker that someone would actually choose? Most people do not fail in this industry because they could not learn lending policy. They fail because they never built a business around the lending. Over 20 years in this business, I've helped over 100 brokers to kickstart their careers and grow a business. If I was starting again today, I would not start with a logo. My focus would not be the website. I wouldn't start by comparing commission splits. I would start by building a blueprint. So, in this episode, I'm going to give you the exact 7 steps to properly plan for your entry into this new profession as a mortgage broker. Firstly, audit the skills you already bring. The first thing I would do is not ask which aggregator I should join. I would ask, what am I bringing to the table? Because no one really starts from zero. You may have worked in banking, sales, real estate, customer service, in a warehouse, and each of these backgrounds can give you something incredibly useful, but only if you understand how to turn it into an advantage. I often say, in this industry, age and wisdom are an asset. The person coming from real estate may understand buyers, agents, and urgency. The person coming from accounting may understand self-employed clients and complex structures. The person coming from customer service may be better at making clients feel heard than someone who has spent 10 years with technical credit experience. That matters immensely. Clients do not only choose brokers because of policy knowledge. They choose brokers because they trust them. They choose brokers because someone explains the process clearly and makes them feel understood. So the first exercise I would do is simple. I would write down what skills I already have that could help me become a strong broker. Then I would write down what type of client would value those skills. Your background is not irrelevant. It is probably the first clue to your broker strategy. You're not starting from zero. You're starting from a place with previous life experience. I would identify the skills you do not have. Knowing what you bring is only half the exercise. The other part is more important, and it's where most of us get trapped. You need to know what you do not have. This is more complex than it sounds. Most new brokers do not know what they do not know. You might think you just need to learn lenders, policies, products, and the CRM, but lender policy is only part of it. A successful broker needs a much broader skill set. You need to understand how to have a first conversation with a client, how to ask questions that uncover the real problem, how to manage expectations, how to structure a deal, how to know when you do not know something, and how to ask for help before something becomes a problem. You need to know how to follow up, how to build trust with referral partners, how to manage your pipeline before you desperately need one, and how to deliver bad news. A lot of new brokers focus entirely on the technical gap. They think if they just learn lender policy, they will be successful. If you cannot generate conversations, there is no one to use the lender policy for. If you cannot qualify clients, you will waste time on people who are never going to proceed. Before I started, I would build a very clear skills map. I would ask what I'm already good at, what I need to learn quickly, what I need support with, and what would be dangerous for me to pretend I understand. In this industry, confidence is good, but false confidence is dangerous. If you are trying to map out your own skills gap and you want a structured way to do it, lock in a time with me using the link in the comments below. Next, let's understand what real mentoring should cover. Once you understand your gaps, you need to know who is going to help you close them. This is where mentoring gets badly misunderstood. A lot of people think mentoring simply means someone helps you pick a lender, or once you've got the lender and once you've prepped the application, it's just someone to check it over. That is a very small part of it. But if that is all your mentoring is, it is not enough. A mentor should help you with scenarios, deal with structuring, absolutely. But proper mentoring has to go further. It should help you become a broker, not just lodge a file. Mentoring should cover how to run a client meeting, how to understand a client's real objective, how to stay compliant, how to build referral relationships. It should help you think commercially. A good mentoring structure should also have layers. If your entire support system depends on one person, you have a single point of failure. I have seen this problem many times. A new broker joins a group and is assigned a mentor. The mentor is a good person and a great broker, but they are also busy with their own clients and their own life. When the new broker needs help, the mentor is not always available. That is why I believe that mentoring should not be built around one person only. It should be a village. You need technical support, business coaching, sales coaching, compliance support, peer support. You need people around you who have seen different problems and different mistakes from different perspectives. If your mentoring program only teaches you how to lodge a deal, it is not teaching you how to build a business. Next, build your value proposition before you build your brand. Even with great mentoring, there is another question that new brokers avoid for too long. Why would someone choose you? Your logo is not your value proposition. Your website is not your value proposition. Your value proposition is the answer to why someone would use you over hundreds of other brokers in the market. New brokers often say things like, I help people with home loans. I provide great service. So does every broker. You need to go deeper. Who do you help? What do they struggle with? What problem do you solve better than anyone else? Without a clear value proposition, your marketing becomes generic. Your referral conversations become vague. You end up saying you can help anyone, which sounds broad, but is actually very, very weak. It gives people nothing to remember. Instead of saying you help people with home loans, you might say, I help self-employed tradies get finance ready before they apply, so they are not surprised by what the banks ask for. Or I help busy professionals refinance properly, not just chase a headline rate. I remember speaking with a broker who had energy and ambition, but when I asked who they were targeting, the answer was basically everyone. The problem with targeting everyone is that no one hears themselves in your message. Once we started working through who they naturally understood and where their network already was, the strategy became much clearer. Your brand is not what you call yourself. Your brand is what people remember you for. And that leads on to the next point, which is plan your first 90 days like a launch, not a learning holiday. Once you know who you are trying to serve, the next step is to stop treating the first few months casually. Your first 90 days should not be random. They should be structured launch into the industry. The first month is often not glamorous. It is setup, documentation, memberships, accreditation, compliance, and learning the process. But that boring foundation matters. If you rush it, you create problems later. You need to actually learn where lenders fit, not just collect accreditation emails. If a lender accredits you and you never take the time to understand where they are useful, you do not really have access. You just have another login. In days 31 to 60, I would start by activating my network, not by blasting everyone with an announcement that I'm a broker, but by having intentional conversations. Who already trusts me? Who knows people who are buying property? Who knows accountants and real estate agents? This is not begging for leads. It is about opening the right conversations. Finally, in days 61 to 90, I would want a simple rhythm. How many conversations am I having each week? How many client opportunities am I tracking? What am I learning from each meeting? The first 90 days should not be a waiting room. It should be a runway. So important that we've talked about it previously. And that is choosing the right aggregator or broker group for your stage. This is where the aggregator or broker group decision does become critical. As I've said before, do not choose your group based solely on commission split. Commission matters, but if you are new to the industry, the higher split is not always the best outcome, because a higher percentage of very little is still very little. The better question is, what environment gives me the best chance of becoming commercially viable? You need to look behind the headline numbers. What happens when you get stuck? Who reviews your deals? Who helps you with compliance? Are there exit fees and handcuff clauses? Do you own your client relationships? Is this group built to support brokers, or are they simply allowing you to join? All of this should be questioned in the context, knowing full well what your skill gap is, where your skill strengths exist, and what your first 90 days are going to look like. A large aggregator can be excellent at infrastructure. They have strong CRMs, broad lender panels, but new brokers often need more than infrastructure. They need translation. They need guidance. They need someone to help them turn tools into behavior. And that's where boutique support models matter. That's where boutique aggregators matter. The best split in the world does not help if you do not know how to write the business. At Finn Webb Broker Group, we do provide that missing layer of practical support. We offer the full-time dedicated mentoring and included loan processing support without the handcuff clauses. For those serious about building a proper broker business, click the calendar link in the description and comments below and book a time to have a practical conversation about your needs. The final mindset shift matters more than most people realize. You need to stop thinking in weeks, months, and start thinking years. A broker business is not built in a few weeks. Some people enter the industry thinking that success will come quickly. But for most people, this is a business that compounds. Your knowledge compounds, your confidence compounds, your referral relationships compound, and your trail book compounds. But only if you stay in the game long enough and build the right habits. If you only plan for the first few months, or a few months at a time, you only make short-term decisions. You chase every lead, compare every commission split, and panic every time things delay. But if you plan for the next few years, you make better decisions. You choose better support, build better habits, become more patient, and make wise decisions. Do not build the version of your broker business that gets you through month 1. Build the version that can still make sense in year 3, year 5, and year 10. The goal is not to become accredited. The goal is to become commercially viable. I hope this provides some insight for you. As I said, please click the link below to have a chat or ask any questions that you like. Till next time.